On January 3, 2026, the United States launched airstrikes on Venezuela, capturing President Nicolas Maduro in a bold operation dubbed Southern Spear. Officially, it's about drugs, democracy, and security. But dig deeper, and it's a familiar story. Oil, money, and American empire. Venezuela holds the world's largest oil reserves, over 300 billion barrels. By evading U.S. sanctions through de-dollarization and crypto, Maduro challenged Washington's control over global energy and finance. This strike wasn't just regime change, it was about securing resources and crushing threats to the dollar's dominance, much like the 2003 invasion of Iraq. President Trump framed the strikes as a war on a narco-terrorist regime flooding the U.S. with fentanyl. Maduro was extracted to face drug charges in New York. But analysts argue the real driver was Venezuela's vast oil wealth and its defiance of U.S. economic pressure. Sanctions since 2017 crippled PDVSA, Venezuela's state oil company, freezing assets and banning USD deals. Oil output dropped from millions to under 1 million barrels a day, revenues slashed by 70–75%. Yet Maduro evaded this through de-dollarization, selling oil in yuan, rupees, and cryptocurrencies like USDT. China took 80% of exports, often at discounts via shadow fleets and alliances with Russia, Iran, and North Korea, the axis of evasion. This not only sustained the regime but threatened U.S. financial hegemony. By bypassing the dollar, Venezuela could inspire global shifts away from USD dominance, potentially tanking its value. With reserves worth trillions, control over Venezuelan oil could underpin U.S. deficits and flood markets to hurt rivals like Russia. Venezuela's economy relies on oil for 90% of exports. Sanctions aim to deny the regime money, as Trump's Venezuela envoy Elliot Abrams put it. But Maduro's innovations, like the failed Petro crypto in 2018, then shifting to USDT for 80% of payments, kept funds flowing outside U.S. banks. Shadow tankers hid shipments, blending crude to evade trackers. This generated $15 billion annually, funding elites while poverty soared. For the U.S., it was intolerable. Venezuelan oil profits allegedly cycled to adversaries like Iran's IRGC, and de-dollarization risked a multipolar financial order. Trump's 2025 tariffs on Venezuelan oil importers and naval interdictions escalated to strikes, opening doors for U.S. firms like Chevron. Post-strike, the U.S. plans to run Venezuela temporarily, likely privatizing oil to ensure dollar-based flows. This isn't just a repeat of 2003, it's a continuation of a decades-long financial war. In November 2000, the Iraqi government made a move that many economists called suicidal. They officially stopped selling oil in U.S. dollars. Saddam Hussein switched the nation's entire export portfolio to the euro, declaring the dollar the currency of the enemy. The move was a calculated act of economic defiance. While Washington dismissed it as symbolic, the euro's value surged in the following years. Iraq ended up earning hundreds of millions more by holding euros than they would have if they had stayed with the dollar. For the United States, the success of the petro-euro was a dangerous proof of concept. If other OPEC nations followed Iraq's lead, the petrodollar system, the foundation of American global financial dominance, could have been dismantled from the inside out. When the U.S. invaded in 2003, the official justification centered on WMDs and democracy. Yet, the first major economic policy enacted by the Coalition Provisional Authority in June 2003 was to switch Iraq's oil sales back to the U.S. dollar. As former Fed Chairman Alan Greenspan later noted, the Iraq War is largely about oil. General John Abizaid was even more direct. Of course it's about oil. We can't really deny that. Like the Iraqi leadership before him, Maduro's primary challenge to Washington wasn't just political, it was the demonstration that a resource-rich nation could successfully bypass the American banking system. Iraq 2000, switch to Euro. 2003, invasion return to USD. Venezuela 2024, switch to USDT when 2026, strike, return to USD. In both cases, the strategy of the targeted regime was consistent. Use energy as a lever to force a multipolar world. By diversifying the currency used for oil, these nations attempted to insulate themselves from U.S. sanctions and weaken the hegemon's primary tool of control. The strike on Venezuela in 2026 serves as a modern warning. It suggests that when the flow of energy threatens the dominance of the dollar, military action remains the ultimate deterrent. It isn't just about capturing a leader, it's about ensuring that the global oil trade remains denominated in the currency of the United States. Oil wars aren't just about fuel, they're about power. Venezuela 2026 echoes Iraq 2003. When resources challenge hegemony, strikes follow. Thanks for watching. Is this resource control or necessary security? Comment below, subscribe for more.